Hey, what's up, guys? Welcome back to Way Up Trading, where we dive deep into the world of options trading and technical analysis. So if you're new here, my name is Will Homer, and I started this channel to share some knowledge with some fellow traders and some new traders who are looking to take their skills to the next level. So we cover everything from beginner level concepts all the way up to more advanced trading techniques. Now, everything is all being done with the goal of having your outcome be more income in 2023. So if you like this type of content, be sure to hit the subscribe button, hit that notification bell so you get more videos like this in the future. With that being said, let's hop right into the video. All right, got the SPY pulled up here on the 1 hour chart. We're gonna go and take a look and see what's happening here. Pretty much had a decent day overall to the downside. Things wound up playing very aggressively downward, pretty much from opening all the way throughout the day. We did have some minor pops in the beginning of the day, but things just barreled down. Again, we had the great earnings report that came through with Microsoft that held the market together for the most part. Also, Google carried the market for quite a little bit of time before things started to take a run for the downside. We've been playing this fallout of the rising wedge on depleting volume throughout the last few weeks, as we mentioned before. This is the rising wedge that's been formed since the 379 mark back in the beginning of March. Fell out of it, crossed down below the 400 moving average, as we mentioned before, and have been pretty much cascading through this volume pocket that we have on the VPVR. Came down, and now we have broken several levels of support, as well as several levels of gap fills that needed to occur on our way before we actually hopefully make a reversal back to the upside. I was expecting to see a little bit more of upside potential, being that we were in OPEX week. There were a lot of options that were expiring, and I expected some positive pressure, but it seems as if the bears pretty much have won the last few days, being that we're on a very volatile week with all the details on the economy, expecting the CPI numbers to come in and things like that. So we have been on the barrel down. Not to mention, we also have the big earnings this week that are pretty much applying a lot of pressure to the market as we speak. We did go ahead and finally hit the last gap fill at the very important level of 404, pretty much touching and bouncing right off of the 400 moving average, as well as the 800 moving average on the 1 hour chart, just about the 800 moving average, and filling that final gap before making a bounce. Right now we're showing up about a 1%, 0.25% recovery in after hours. Closed the day at 404.36, had our low of the day at 403.78, and now we're back to about 405.34 at the time of this recording, which is roughly about 30 minutes after the closing bell. Opening up the 5-minute chart here just to get an idea of how we move throughout the day. You can see that we had our crosses after hours after the Google and Microsoft huge earnings wins yesterday, pushed us up. Pre-market pretty much started to sell off, obviously, with the pop. Microsoft having almost an 8% run by the time the morning hours hit. Obviously, easy opportunity to sell off because there was still a lot of uncertainty in the markets. So a good opportunity to pull some profits and things of that nature. That wound up happening, opening up this morning at roughly about the 407 mark, and literally just started cascading down. Got a bounce somewhere around 405 is where I entered a lot of my calls positions. I actually wound up purchasing 407 calls, roughly at about the 405.35 area, 405.40 area. Wound up writing those calls up, 0 DTEs, 407 calls. Those went as much as 200% today. It was a great return on investment. If you were able to follow me along on Twitter, hopefully got in on those and were able to make a nice little bag for yourself. I usually trim my positions on the way up between 10, 20, 30, 50%, 100%, and leave runners on the end just to make sure I'm capitalizing and taking profits along the way. This is the way I recommend doing it, and hopefully you follow along with my process just so you can be sure that you can maintain your profits throughout the process, as well as avoid any kind of flash downside candles that can just remove your profit completely. You can see after that move in the 5-minute chart, you can see that we got our EMA crosses. Again, these are indicated by the small plus signs that I have here marked. Yellow cross here marks our 921 cross. Purple marks our 1348 cross. And the 9 EMA, I rode this the entire way up to about 407.69, which was about the 200 EMA on the 5-minute chart, and called tops right about here. You can see that we actually had a break of the 200 EMA, which I knew that was a time to reverse. This is roughly around the lunch hour. I mentioned this on my Twitter. Generally, volume tends to fall off going into lunch. So it was a great opportunity to close that position, just leave some runners and open up puts going the opposite direction. Fence that goes up fast comes down fast. So I called on Twitter also that we have puts most likely would be the play into lunch. We did have slight upthrust after slight distribution earlier on in the morning. I did actually have a situation where I got a slight stoppage on my put position that I took a little early to hedge my position. That actually wound up being okay, but I went on a small loss, but went right back in, noticing that the play wasn't over yet. It was very oversold, overpurchased, overbought at that point, and I knew it was going to come back down, and it sure enough did. We started to get that collapsing on the 9 EMA, and this thing barreled all the way right back down. Failed the 21 EMA. We got the cross to the downside on the 921 and just played this thing all the way down to roughly about 405.50. I left a runner, and that play also worked out well. Roughly about a 40% gain on the way down due to entering a little bit too early and theta kicking in and things like that. So it was a great play on both directions. But overall, our main supports that we have on the overall market right now, we mentioned before, we're sitting on VPVR as well as we filled the gap, which was roughly about the 403.78, 403.80 mark. You see this line is marked on VPVR, showed solid support before we got our bounce. And you can see after hours, volume is starting to kick in and pushing this thing back up towards 405.50 just about right now at the time of this recording. Some of the fears that are actually contributing to the sell-off today. We have the debt ceiling is going to be discussed today at about 5 p.m. Eastern Standard Time. There's going to be a vote that's placed on it, whether or not they're going to raise the debt ceiling. I don't have too much fear in it because it's not something that's actually ever failed in the past, but anything can happen, and there are always going to be fears in terms of the financial markets. Just people trying to protect their investments. So do keep a lookout for that. That can have a major impact on what happens after hours, as well as what we can expect for the coming days or two afterwards. Not to mention CPI coming up on Friday, which is going to be huge, as well as core PCE information. So stay tuned on that. Be very mindful of your positions if you're looking to play calls. Puts obviously right now are the higher likelihood of success plays. So do keep your eyes peeled for opportunities. They're going to be all over the market tomorrow. So stay tuned. All right, now taking a look at the chart here. I went ahead and open up the 1 hour chart just to get a better understanding of the levels that I see going forward. Even though we are falling off a mountain from the time of 416 down to where we are now to roughly a close of 404.36, we did still hit a optimal price in terms of harmonics. Now, we had a bullish back pattern that's been playing out since our top at roughly 416. We did play out the entire schematic. We broke through the 400 moving average and have played every level almost to a T. Taking a look here, 404.21 was the optimal price. We did close above it. I'm expecting a bounce again, as we are already doing in after hours. Next area would be the XA, which is going to be at 406.86. I'd be looking to play calls. If this tells me that there is a bearish reversal, let's look at the volume profile. You can see we've been steadily climbing up in positive volume. Even though it may not feel like it throughout the last couple of days, there is still positivity in the air in a technical sense based upon the volume profile. So I can see a reversal happening from here. So calls can be something to pay attention to. We are still in a bearish environment because we are still underneath the major EMAs, the 200s and the 400s as well. But there is some opportunity for some upside as a relief bounce from the aggressive downtrend that we've had over the last couple of days. Ultimately, I would look at this from a Wyckoff perspective that we are in a full distribution and there is more downside to come. So if you're going to play calls, play them short, get in, get out, make your profits, and then move on. I would look to load up further on your short positions and your downside position for the longer term with whatever profits you make on the short-term pops. And again, short the pops down with you using your capital gain from your calls and however else you're making your money to play your longer side puts, because I can see this getting very aggressive if we get any kind of negative news going into CPI and other big data that's coming out the next day or two. Not to mention jobless claim and core PC. If 404 fails, if we don't get our full bounce to 406, I expect this to drop very fast down to the 400 level or below. From Wyckoff's perspective, we have a full distribution that's playing out. Right now, we're on last point of supply before most likely breaking down and showing full sign of weakness. You can see this would be considered a buying climax, a sell test. Pretty much just played out an automatic reaction. Last points of supply pretty much playing all the way down. And if this last point here breaks, I could expect somewhere closer to about the 399, then 395 mark would be somewhere to pay attention to. If 404 fails, then 400 fails. So pay close attention to that. Again, any negative information that comes out in the next couple of days, that's the levels we need to pay attention to going in for the next few weeks. All right, so that pretty much wraps up the video, and I want to know what you guys think. Leave your comments and questions down in the comment box below. And of course, if that button is still red, go ahead and click like, subscribe. Join us on the way up. We're going to be here every single day, growing our portfolios together and making the outcome income for 2023. Don't forget, leave your comments, like, subscribe, and we're going to see you on the next video.